Great. Thanks, Jerry. I appreciate that. Happy to be here tonight and want to talk a little bit about the four pillars of property management. And I appreciate like these specifics like Carolina. I started investing in North Carolina a few years ago and couldn't be happier investing in that part of the country and all the benefits that come with North Carolina. I presently live in Minnesota, so anytime I get a chance to get out of the cold and go somewhere warm, I enjoy that. So before we get into the nuts and bolts of that, I'll do, if I can, hold on, there we go. A little bit about me. This is my wife and three kids. You can see we're an active family. We like to do a lot of stuff together, whether it's skiing or scuba diving or golfing. We like to just get outside. My wife and kids like to ice fish and snowshoe and that kind of stuff. I'm from California, so I never got into that part of being in Minnesota. Professionally, I got my real estate license in 2002 and became a broker. I started a brokerage in Minnesota. We had 35 agents. We're doing about $40 million a year in business. That was great from 2005 till 2009. And then, unfortunately, I was I got hit by the downturn as hard as anybody. We lost our brokerage because of it. But kind of the same way all of us are on this call, I'm sure. I'm very entrepreneurial. And I started looking for other ways to make money in real estate. There had to be someone, someone's always making money. It's just a matter of which side of the coin you're on. And I just needed to get on the right side of the coin. And so I got hooked up with the main company that sold HUD properties in Minnesota. And I went from not getting paid for 9 months during the recession to selling over 100 houses a year during the recession, which was unheard of for real estate agents. That wave ended in 2014. I began working in the homeowner association management business. I wanted to take a break from real estate sales, so to speak. Worked at that for a few years. Again, that entrepreneurial spirit came out. I started my own company. We started from zero in 2018 to managing over 450 associations, 45,000 doors. We had about $70 million in cash under management and about $6 billion worth of assets. In 2021, I sold my shares to a small private equity company called Morgan Stanley. If you guys have ever heard of them, they came in a big way, and it was a good time for me to exit. And I knew that I had been buying and accumulating rental properties for some time, but I think as most people that are on this call, we all find that the next step in that evolution of our journey is to move into apartment investing. And so I knew I wanted to get into multifamily, join the same group that Jerry did and John was, and got mentored in how to buy multifamily properties. So that's kind of my history, how I got to this point. Started buying first in Greenville, North Carolina, and now we moved on to Jacksonville. My background being part of the HOA business was asset management. That's what we did. We managed assets. Like I said, $6 billion. And we kind of broke it down into four pillars. And so I'm going to talk about these four pillars that we worked with, and maybe you can work with too, because a lot of people think asset management is really just, improving the property. And it really isn't. There's a lot of different components to it. A lot of different pillars. We talk about the tenant experience, the employee experience, the vendor experience, and the investor experience. So what is asset management? It certainly plays a crucial role in optimizing the performance and the value of real estate investments. So what our role as asset managers is to make sure that the plan we put together is performing so our investors are making money. And so beyond the financial metrics, successful asset management strategy encompasses the satisfaction and engagement of all the various stakeholders. Those four people that I talked to. If any one of those are out of whack, just like a house, if a pillar is breaking down, you're going to break down in other areas. So in my opinion, you have to have all four of those areas equally aligned. So let's talk about what does it mean? So what is a tenant experience? A lot of people don't really look at the tenant experience when they're looking at the asset management. They just like, if I take care of the outside and my investors get returns, it'll all come together. But that's not true, because this is where it all starts. It refers to the satisfaction and overall journey of occupants within the property. So basically the people who live there. What does that mean for them? A positive tenant experience not only enhances the occupancy rates, but also lease renewals and tenant referrals, which are I'll show you in a minute, make a huge part of your profit margin. And some of the key factors in this experience are communication, responsiveness, maintenance, amenities, and community engagement. So what are some ways we can improve this? One of the things that we work on in our buildings are regular communication channels. That means you have to have a good website, good portal, good software behind the scenes. And when people reach out to you, that means that you're going to get back to them and you're going to answer their questions promptly, or you're going to answer their maintenance requests promptly. You're going to have high quality maintenance. It can't be just Chuck in a truck who has a pickup truck that you got his name off of a sign at the convenience store. It's got to be someone who actually knows what they're doing. They're licensed, they're bonded, they've done this before. Yeah, I believe you have to have some amenities and services, provide attractive amenities such as fitness centers or dog parks, concierge services, depending on whether it's an A, B, or C property. And then community building through events, networking opportunities, and social spaces. Like we're planning a pool party at our new Jacksonville property for next spring and summer. It's kind of a way to introduce people to each other and build some community. We believe that's an important concept to it. So let's talk about the cost of turnover, because a lot of people don't pay attention to this. So do you know the average tenant moves every 2 years? And this number can go up or down based on what the tenant experience is like. And so there's a real cost savings based on how often you have turnover. If you have people moving so let's say hypothetical 100-unit building, and you have one move out a month, you have 12 move outs a year, it can add up pretty quickly. And so I'm going to show you an example. We did some research on money spent or saved based on a 1, 2, and 5-year turnover. So first of all, let me just stop. And how many people have had their tenants say this is normal wear and tear on a property? This is what they all think is normal wear and tear, but this is unfortunately how we've gotten back some of our units at our properties, especially when we're taking over a new property. So tenant turnover in years. If you have a tenant that's turning over every year versus every 2 years, and you're doing 8 units per month, which is not unreasonable for a 100-unit building. It means you're, that 90, 85, 90% vacancy rate. Your yearly cost is going to be close to $500,000. 5-year cost is going to be $2.5 million, and a 10-year cost of $5 million. Well, what if you cut that in half? So now you only 4 units per month you're turning over. You have a yearly cost of $250, 5-year cost of $1.2 million, and a 10-year cost of $2.5 million. And this is assuming a $5,000 renovation. Now you could do that cheaper or more expensive depending on where you're in the country, but just to compare apples to apples, I went with a $5,000 renovation cost. What if you have tenants that are turning over every 5 years and you're doing 1.5 units per month? Well, look at the amount of money you save between the top number and the bottom number. Over a 5-year window, which is what most of us are doing for our plans, you're going to save $2 million. That's just straight to the bottom line. So you can really, if you poo-poo the tenant experience, just come back to this number right here. And I know there's a company out of Georgia called DLP. They have their average turnover as their tenants move every 8 years. So imagine what they're saving, but if they go from 1 year to 8 years. And they do that by achieving good tenant experience. So I implore you to take a solid look at tenant experience. So let's look at investor experience. So the investor experience focus on providing transparency and reporting and maximizing returns for investors. So basically, this is when you're raising money for a property, it says you're going to provide for them what you say you're going to provide them, and you're going to give them reporting that shows what you're doing, and we're going to get you the best returns we can. And really, the transparency and regular reporting, that makes all the difference for most investors. So that's the job of the asset manager is you've got to make sure that your numbers are clear, you're doing it according to plan, and you're getting them, the investors, the numbers to justify what you're doing. So a positive experience leads to continued investment, referrals, and long-term partnerships. I know we had, I don't remember, John, what the number was, but we had almost 100 investors on Cardinal Village, I think, somewhere in that range. And
Yeah.
a significant number of them are investing in our Exelia Garden property because they're having a good experience. A significant number of the people who invested in Cardinal Village were investors from our properties in Greenville. So you do all the hard work to engage these investors. You want to keep them around. When I was in the sales world, our saying was there's no better lead than the customer you already have. And so we kind of believe the same thing. So again, the key factors are communication, financial performance, risk management, and alignment of interests. If you buy a big enough building, you're going to have employees, or you're going to have maintenance guys that are employees. Or if you buy enough properties, you're going to have maintenance guys. And so employee experience focuses on creating a positive work environment and fostering employee satisfaction. We all know that the labor market's really tight right now, and the cost of hiring and training a new employee is really, really expensive. So engaged and motivated employees drive operational excellence, innovation, and tenant satisfaction. I can't tell you how many times already we've come into Cardinal Village and we have great employees there now, and people are making comments left and right on how good a place it is to live. It just changes the dynamic of the property. Key factors are workplace culture, training, development, recognition, and work-life balance. So then we talk about vendor experience. Vendor experience focuses on building strong partnership with suppliers, contractors, and service providers. Guys, I can't tell you how important this is. If you have good relationships with your vendor, everything gets better. You save money, work gets done faster, it gets done on time, it gets done efficiently, and it gets done with good quality. And you oftentimes get referrals from your vendors in ways that you wouldn't even expect. For example, you get more tenants. They say, hey, this is a great place to live. You even get leads on other buildings because these are the kind of places that they want to work with. So they want you to own buildings. So we've had some of our vendors that refer us to other owners like, hey, you should sell to these guys simply because they want to work with us. So positive vendor relationships enhance quality, cost efficiency, and operational effectiveness. And some of the key factors are communication, fair contracts, prompt payments, and collaboration. And I should have put prompt payments first because that's what gets everybody to like you. If you pay them fast and you pay them on time and you pay them what they're supposed to get paid, pretty much you can do anything or ask of anything, and they're going to work hard for you. So what do we measure? I took a snapshot of what we measure and how we measure it. And so I'm going to kind of just go through. This is our one of our properties in Greenville. It's called Stanton Point. When we took over last year, these are there's two pages to this. So this is the first half of it. These are some of the things that we measure right away, and we measure on a weekly basis with our property manager. I'd encourage you to get in when you first take over a property to get in a cadence of a weekly call with your property manager. Our job as the asset manager is not to manage the property. Our job is to oversee the management of the property. And so the property manager, it's their job to manage the property. Oftentimes you'll see an asset manager get in the weeds and try and be the property manager, and that doesn't work well for anybody. So remember, your job is to oversee the property manager and everything else we talked about. So back on November of 2022, so almost a year ago, we had 5 vacant units. 5 units were in process. Our collections were $34,682. So on a 124 unit building, that meant our average collection was only about $360 per month. We had some vacancies, but it was low. We were getting like $400 and $500 per month rents. We took over from a slumlord. Place was in shambles. It had bed bugs. It needed new roofs. Those pictures I showed you earlier, that was kind of a typical picture of what the units looked like. You can see our occupancy rate when we started tracking the next week was 87%. We had 6 units that we had vacant and turned, and we had 1 unit was in process. Again, on the 16th, we're at 40,000, and by the end of the month, we're at 43,000 collected in rent. It shows our month-to-date collections, our total delinquency, and what the move-ins and move-outs were looking like. So remember those numbers: 34,000 collected, up to 43,000 by the end of the month, and this was last month. We're at 94% occupied. We turned 3 more units. Our goal is to turn 124 units there. So we're about halfway through that. We've turned over 60 units in the last year. 3 vacant units in process. So if you look at the beginning of the month, it's 36,000. But if you go down to the bottom, we collected $78,000 last month. So we went from 40,000 to almost $80,000 in 1 year, less than a year. Our delinquency, don't look at that so much because that's bad debt from the previous owner as we moved people out. But so there's a lot that can tell you that story, that what have we done in the last year that has increased rents by double, which is almost, it's almost unheard of in this space to be able to double the rents collected. Well, what we did was we started moving bad seeds out. We started renovating units. We started increasing rents, and we started bringing new people to build community in the apartment. And so I'm going to show you some other key metrics here. So we look at this last month. This was our traffic. We gauge our traffic, our apps, our approved applications, our units under construction, which unit numbers, how many units have completed, current renewal rates. So we went from about 450 renewal rates to 750 and 795, and our current rent offers in the market are $850 and $945 per unit. And I'll show you how we got to that on the next page. And if you look onto the right side, the renewals was at in the 40s. So that means that this calendar year we've had 42 people renew at the above at the rate of 750 or 795, depending on whether it's a 1-bedroom or a 2-bedroom. So what that tells me as an asset manager, we're connecting with our clients, we're connecting with the community. People that live there are wanting to stay there. When we bought the place, it was almost as soon as your lease was up, people were moving out. Now we're, I think, at about 75% are renewing, and so it makes me happy to see. I think we're achieving our goals for sure with tenant experience. And because we're achieving those goals and we've doubled our rent collected, we're achieving our goals with investor experience. And we're only doing that because our vendors and our employees are working hard for us. So you can see they're all interconnected. So how do we use this data? So what does it mean? What do we use it for? Well, last March, you can take a look. There was a different story that was going on now. We were getting 10 calls a day, 20 Facebook messages, and 12 emails daily. And then every week you see that it was busy. We're getting 10 apps a week, and we approved half of those. So we had a lot of vacancies because we were doing a lot of renovations. So what would that, if you saw this data, what would that tell you? Anybody got a guess how we used it? So the way I looked at this data was, it's really busy. We're probably not charging enough rent, right? We have that many people. That's an abnormal number of people that are looking at your property. That means there's probably the market has really got all in gangbusters. And at the time, we were probably $600 for renewals and maybe $700 for new offerings. So now I'm going to go back to this page. This last month, we're getting two apps a week, 1 app a week. We're getting 12 engagements per day, versus here we're getting 40 to 50 engagements per day. So now we're kind of back in a little bit of this is probably a better cadence. It tells us we're probably closer to pricing, but this also tells me that we could probably go up in price again. we're going into the slow season, but I can guarantee you when February comes, when we start to go into a moving season comes again, we're gonna bump that up to, we're gonna get over $1,000 on a 2-bedroom, and we're gonna get over $900 on a 1-bedroom. And so we'll jump that up even more. So this metric that we use on a weekly basis is already helping us plan and budget for next year and get into alignment with our property manager on a marketing plan and how we're gonna make the best use of this. And we have a number of these key metrics that we track and use to make some of these decisions, such as renovation costs, turns, all those sort of things. One of the big things that we're working on right now is material costs. As we all hear, material costs are going through the roof. Well, we just put together a new tool that I'm pretty excited about, where we're tracking. So our maintenance guys go through a unit. We get 30 days notice. Within 2 weeks, our maintenance guy will go through there. He'll take an inventory of everything we need. He's going to input this into an electronic form. That form will send off an email to our team telling us this is what we need for product. Our team has negotiated 30% lower than retail prices at some of the big box stores just because of the relationships we have. Even like Lowe's and Home Depot, and like our Lowe's person at the pro desk is now calling us with sale prices that were 30% lower than what the public gets. So who's ever had a big box store call them before like that? I haven't, but now because of the volume that we're doing in this area and because of the way we treat them, they want to do business with us. And so we're able to now do just-in-time purchasing on these materials rather than storing things in units, possibly stuff walking away, inventory getting misused, theft, all those kind of things. So I'm really excited about that. And now we've put together a tool that not only will tell us what materials we've been using, but we can look down to tunnel it down to even how much does the black refrigerator cost versus the stainless refrigerator, what the cost has been over the year. We're seeing now that black appliances have gone up in price, stainless steel appliances have gone down in price. And so now we can get a stainless, which most tenants want, for about 20% cheaper than we get a black appliance in Jacksonville. It's kind of a weird phenomenon, but we have the data to prove it. So we're able to really dig into our metrics and our data to make these decisions in real time and ordering the materials in real time, which again leads to both a better tenant experience and a better investor experience. So that's what I got for you on asset management. We can open this up to discussions and questions, and I promised Jerry I wouldn't take too long with this and be too long-winded. Here's my contact information. I believe that this community is about giving back. When I was getting into investing, someone mentored me and said, the only thing I expect back from you is to pay it forward and give it back. So if you ever have any questions, here's my contact information. I'm more than happy to answer it. Shoot me an email, shoot me a text, give me a call, and we can go from there. Most of the calls I'll give to John anyways. Yeah. All right, that's all I got, Jerry.